All right, thanks for joining me this afternoon, gents. Very privileged to have these two fine fellows here with us today. I'm going to kick off by just asking you to briefly introduce yourselves, if you wouldn't mind.
Sure. So I'm Bill. I'm a partner at Connect Ventures. We're a seed fund based in London, and we invest throughout Europe. So maybe, I'm not sure, you've probably all heard about venture capital, but maybe just a very quick description of what it's all about. So we go out and we raise money from other investors, private individuals, institutions, corporates, and we pool that money together to go invest in startups. And what we're trying to do is build a portfolio of startups such that we create an asset that then hopefully returns a lot of money to our investors. For us to be able to do that, we need to bet on very risky things that have a high, when they work, have a very high return. But when they don't work, and quite often they don't, maybe don't work out to so much. So, but the idea, though, is it's like a collection of very high-risk assets altogether. So it's worth thinking about when you talk to a venture capitalist that they're really looking for what's the big idea, and they're more interested in you have a big idea that, though maybe it's a small chance of being very successful, when it is successful, it can be very big. So in general, venture capitalists don't like safe ideas.
Thanks, Bill, and introducing yourself. You've answered all of my questions. So.
All right.
Free to go.
Yeah.
Jaka.
Yeah. Hi. So I'm Jaka. I run a company. Well, I run and co-found a company called D.Labs. It's a peculiar company. It's a bit of a hybrid between like a company incubator and a service company. And it started from Slovenia, but it's now London-based. And what we do is we basically take those founders that sort of companies like Bill's invest into. But who probably never gotten to a point where they've actually built a tech company before or have sort of gone down the process of actually building something this volatile early stage type of thing. And what we would do basically is we would provide them with an environment ranging obviously from lots of different services, tech, UX, marketing, whatever they need, but also put them in a certain like framework, both of let's say of mind and of business development, so they basically don't do the usual mistakes. And it's funny how many successful companies you can actually put together by not doing mistakes. In contrast, obviously, to the ones that you need to risk and just have it really, really high yield. In doing that, we've been doing that mostly in London for the last 4 years. I think we've been dealing with right now, I think about 40, 45 startups, something like that.
And can you tell us on what basis you work with these companies? Is like cash, equity, you come in really early stage?
Yeah, well, basically it's the following, right? We are still in effect, despite how sexy I want us to make, to make us look, we're still an outsourcing company, no matter how you put it. But typically, outsourcing companies would say, okay, so we'll deal with early stage companies because then when they grow, they're going to be big and they'll feel obliged to work with you. And then we'll make a lot of money from them. We think a little bit differently. We take the money for services, basically as with any company, but we will not scale with them. But that's not our forte. For us, that's boring in a way. So we do take a very small part of equity that says, and when you guys succeed, we're going to have a part of that, but we're going to help you to scale with the right team, despite the fact it's not going to be us.
Cheers. So we've got a London-based investor here, and we've got Jaka, who's taken a business from Central Eastern Europe over to the UK, and also I think it's fair to say serves as a connector and mentor and advisor to many companies looking to do the same journey. But the interesting common ground, so you're both looking to pick winners, right? You're both looking to back companies you think are going to be successful, with your equity involvement as well. So what are you looking for?
Well, I guess for us it starts with a team. We want to see a team that can build its own product, or at least build a prototype of a product. And we want to see a team that really understands the problem they're solving in kind of a deep way and has thought of an elegant solution for that, and can demonstrate that in the quality of the product that they build. So for us, because we invest pretty early, we tend to be the first institutional investor in a company. You can't do a top-down market analysis, because who knows, it might be a brand new market, or you're resegmenting an existing market, or completely disrupting the normal way of doing things. So what we look for is, as a proxy, is a really high-quality user experience, if you want to think about it that way, and then some evidence, maybe it's just from a trial or beta testers, but some evidence that the users or the customers really love what you've built.
Well, on our side, it's the same, but same but different in a way. So mostly we wouldn't deal with teams. We would deal maybe with a founder or a co-founding, just a pair. together. And what we would typically look at is we would look at sort of prior, I would say more executional skills than anything else, obviously because we bring the different components to the table. But I'd say that the most important part actually probably is the market itself, the way it enters. I think Market Reason once says that even with a mediocre team, a good market will extract a great product out of it. And yeah, we don't have any illusions that we are magic gurus or anything like that. But when we do have a good market, we can make a great product. So.
So I think we found out earlier today, a lot of people in the room here today are founders, whether that's first time or on your entrepreneurial journey. And when you're thinking about pitching yourselves to guys like these, are there any obvious red flags that really sort of get you thinking and maybe cause you to start worrying when meeting a company for the first time or hearing more about them?
Well, I mean, for us, we don't like to see somebody just pitching a PowerPoint. We want to see a prototype. I don't really want to see a business plan. It seems like, in some ways, a waste of time when you could be spending that energy making a prototype. So, I mean, those would be pretty upfront red flags for us. Us specifically, I mean, the different funds have different philosophies and look for different things. For us, we don't like to see a team that can't develop its own product. So if you're outsourcing, I mean, it's fine if you outsource part of it, but if you have no technical people on your founding team, that's probably a red flag for us.
So you can work with one of these guys, but not both, basically. Yeah.
Yeah, for us, I'd say probably just using big words in big contexts that don't mean a lot, and it's unbelievable how many of those you still see around. No, but basically, we have our own little onboarding process where, in a way, it starts by them having to do a lot of homework, and through that period, there's a lot of things that sort of crystallizes itself, which means that the drop-off in our onboarding would be quite high, but the ones that go through are actually the ones that then can build something meaningful.
So, Bill, you just announced at Connect your investment in Incrediblue down in Greece.
Yes.
You've also invested in Spain and Scandinavia.
Yeah.
What does it take for you to invest in a company, Central Eastern Europe, outside the UK?
Well, I think I'd love to be able to do that. I mean, and we're looking. I mean, I'm here. I'm meeting all kinds of great teams. But no, I think a really great product. That's the main thing for us, that we sort of have to really believe in the product that the team has built and see that it looks super compelling. That's like the main lens through which we look at all the opportunities.
So it doesn't matter where you are, if you've got a great product, come speak
Yeah.
to you, you'll be interested.
Yeah, definitely.
I think a lot of people perceive there's a lot of strength in this part of the world in terms of engineering and
Sure.
product talent. Do you believe that? Do you see that as a particular strength here? Are there any strengths and weaknesses you see in
Yeah,
businesses?
I mean, the strength clearly is the development talent and the ability to just be great developers. I think the weakness is probably on the product marketing side of things, and maybe on the just sort of the more selling side of things, where I think it might be something to think about, that how you augment your team with those sorts of strengths. But at the stage we invest in, those are always, you can always build a sales capability, really having this strong ability to build the product but also market it. So I think here maybe the strength is on the product building and less on the marketing of it.
Thinking about building the market, would you be comfortable investing in a company that only has traction so far in small Eastern European countries, just their home country?
In terms of the traction, that's fine, unless it's like unique to that place. If you're building a product that's going to address eventually a much bigger market, that's what we're interested in. If the only proof you have so far is in Bulgaria, that's fine. But what we wouldn't be interested in is a company whose biggest aim is to dominate Bulgaria. We'd want to see something where it has a more global ambition.
Jaka, you mentioned earlier, we were chatting about examples of companies that have made the jump from Central Eastern Europe, companies like Samantha, Farmeron. Do you think there's interesting things we can learn by watching what's worked, where people have been able to really start here and grow?
Yeah, I think we can. I think what we've seen is that sort of very ambitious teams, especially if they had any sort of international background, were benefiting highly by moving straight into sort of big accelerators, whether it be London-based like Seed Camp, or basically or Valley-based like Y Combinator, 500 startups. But the fact is that there's not a lot of founders actually that are like that. In those three cases which you've seen, but like Seed Camp, Union Square Ventures, or Seed Camp, Greylock at some point actually, huge, huge stepping stones. But typically, what you actually find is that even for that step alone, you actually have to be prepared. And when I say prepared, not just from the standpoint of a product, but actually from a standpoint of a founder who gets what is it that he actually wants to achieve, with whom, with what stage. All these questions is something that, if you haven't been there before, then go local, find local help, find accelerators like Launch Hub, like 11 around here. That's their purpose, to actually get you ready to move on to the next step. Right?
So I wanted to change a little bit and talk about, so if you're a company that's started around these parts, and it's your first trip to London, you're looking to to go there to seek finance, to grow your business, you maybe don't know what to expect. Like, what would be your advice or your insights to help? You've both, spoken with many companies making this journey for the first time. What would you tell them?
I think you make sure you kind of scope out the landscape before you go. Find the people that know how the scene in London works, and make sure that you've talked to them and have them introduce you. So plan, there's no point, it's sad to see, but I've seen entrepreneurs just kind of rock up in London, having flown in, and just kind of cold call and bang on doors, and that's just not a really effective way to do things. You're just going to get higher quality attention if you use your network to reach out to the people there. And then, I could go on and on,
yeah.
Might as well. But also, I think there's no point going to talk to a VC if you're trying to raise 50, 100,000 euros, something like that. It's just going to be a waste of your time, more than the VC's time. So don't do that. You've got to go when you're ready to raise the amount of money where it makes sense. So I would think at the minimum would be something like 300,000 euros. Because most VCs in London aren't going to write checks that are much smaller than that. There might be some exceptions, but so you got to make sure that you're ready for that.
Who should people who should people plan to meet in London? Should they come and meet you guys at Connect, like Index, Seed Camp, or?
Well, I suppose it depends on the stage that you're at. But if you're going to go raise seed money in London, there, I guess there's Connect, there's Passion, there's maybe EC1. Although I think they only invest in the UK. I'm not sure. There aren't that many options.
Is there a particular stage that you would want to meet people at yourselves?
We tend to meet and have relationships with entrepreneurs for a while before we invest. Well, sometimes we invest straight away, but sometimes we invest in entrepreneurs we've known for a long time. So it's all right to meet people before you're ready to raise the money, but you just got to make sure that you have that story right, because again, you got to be conscious of your own time, and your time at the early stage is better spent building your product than it is kind of going on a wild goose chase for chasing money when you're not ready.
So this is an example of some of the the classic contradictory startup advice, right? Where people say you want to build relationships with investors, but at the same time you should be focusing on building your product first. So how do people go about doing that? If people want to have aspirations for raising money, maybe in London, maybe in the US, in the future. People say investors like investing in lines, not dots, right? People they've seen repeatedly, but from both of you, what would your recommendations be in terms of how you build relationships with investors?
Well, I would say, first of all, it probably means that as a founder, you're going to spend much more time at the place where your investor actually is, no matter how you want to cut it. That doesn't mean that the whole team has to move or anything like that, but it means that your balancing act between, being a remote founder actually has to be quite significant, and that's not an easy task actually. And no matter what people tell you, it's really hard to raise cash if you're coming from, a part of the world where the investors are not there. Unless obviously you run across, just stumble upon either great product or anything like that.
Do you need to move to London to raise money in London?
No, I don't have to move to London, but I think you have to be a part of the scene. I think that even VCs, I think, are very honest when they say, guys, this is not a democracy. This is not an open market. It's not open, equal access for everybody. No, we have people we trust, and we build our networks for a purpose, so that the filtering, that comes through this network is something that's meaningful for us, that saves us time, so we can be more effective. And it works both in standpoint of sort of going against the investment, but also from the awareness side. There are places in London where at certain points in time you just have to be. You have to figure out what they are. But they're all the usual suspects at some point in time are going to be there. And it is about frequency then as well, as with any marketing.
Bill, you mentioned that you typically invest in people you've known for a while. Like,
Well,
how would you
no,
expect that to...
typically, I mean, it certainly is. It helps, right?
Right.
You know, having a relationship. I mean, it's not always something we're able to do. But
So how do people do that? Like, how would you expect that to pan out if it's someone you may be meeting for the first time today and you may be investing
well, it
in
could
the
be that
future?
when we certainly meet plenty of companies where maybe it's just not quite the right fit for us, or maybe they're still a bit too early, you know, in their very early days. That doesn't mean that, you know, that's a good basis to start a relationship, though. And then, you know, we love being kept up to date on how things are progressing.
So if you meet a company, they're not right for you today, but you'd actually appreciate being kept in touch so you can see
how things develop.
Yeah, it's interesting. So I imagine, so say you've raised 200K, you know, in locally where you are, whether that's Bulgaria or Central Europe or wherever. What do you need to achieve with that in order to be investable at the next stage?
I think you've got to get yourself to having a product. You maybe haven't launched it like full on, but it's a working product at some level. It could be pretty basic. And I think, you know, you need to be able to show that, hey, there is somebody out there that really likes this. You know, that you kind of have to strip away some of the dreams and show some of the reality. It doesn't have to be like, nobody's expecting to have a huge amount of traction, but you've got to show that, okay, we have some evidence that what we built is meaningful.
Mm-hmm. Jaka, you mentioned earlier about this idea of being sort of caught between stages of your company, caught between countries on top of that. The first part is something I certainly relate to from my entrepreneurial journey. Of you think, oh, we'll raise the money, and then we're going to use that to achieve X, and then we're going to go and raise our 5 million, and it's all going to be peachy. But it maybe doesn't always happen out that way. Like, any thoughts on like how to navigate that?
Well, don't get in that situation. It's like this is very good advice.
Actionable. I like
actionable advice. No, actually, I think what we need to understand is the fact that the same product market fit in a way, that might be successful in London, might be investable in London, might not be something that you can actually realistically start from Bulgaria. Because no matter how we talk about global businesses and stuff like that, there is, you do expand yourself by market hopping, slowly. And for some products, you just have to start in big markets. And the only way to start big markets is big investment, and big investment means credibility on that market, and sometimes that's just not achievable. So first of all, pick the right product market fit. And second of all, what I've seen here time and time again is people starting to think about, oh my God, I need investment because I'm running out of cash. You're already there. You're in cash limbo. You're a poltergeist, and it's really hard to move out of that one. So do be aware that even if you don't start to build relationships with direct with guys like Bill, you need to think way more ahead than what you typically do right now. And when I say way more ahead, what average investment here to 100K, which means 8 to 12 months burn rate, which means, guys, in month 4, you need to start thinking where you're going to raise your next, your next cash. So it's not what you can achieve within 8 months, it's what you can achieve in 4 months, so you can get the attention of someone like Bill.
We got 5 minutes left. I want to leave 5 minutes for some audience questions. I can't see you, so if you've got a question, just shout out. One last question from me while you're preparing those. So if you're planning to fly out to London, for example, to raise money, I think, Bill, you alluded to this before about don't just land cold and start knocking on doors, but what would you advise people to do?
Well, but there's plenty of people here on this scene that have connections into London, sitting next to one. Talk to them first. You get the warm. It's always better to have a warm introduction or several introductions. I mean, you definitely notice when a company has multiple people that introducing you to them. It grabs your attention. So do that, and then have a specific plan. Don't be ashamed to ask for what it is you're asking for. There's a lot of these kind of meetings where it's kind of beating around the bush, and you're not really. It's not clear what the entrepreneur wants. So I would just cut to the chase and say, hey, look, we're raising whatever, $500,000, and this is what we're going to do with it. It's a lot more effective use of your time.
Cool. Anything else either you guys would like to add? No. Do we have any audience questions? Anybody? Just shout out. Yes. First, whoever was first. Yep.
Is it? Okay, cool. Ned here from Aloha. We're a startup that actually builds startups. So a question for Jaka. You're entrepreneurs. You mentioned you're sort of a hybrid between a service company and an incubator, right? So I suppose that the entrepreneurs that come and they want to get incubated, they actually do some work for the service company. So do you pay them?
No, they don't work for a service company at
No,
all.
so you don't mix the incubator with the service company, because you define you're some sort of a mixture. So I'm just wondering, is there any correlation between the entrepreneurs and the service company
No,
you're building?
none whatsoever. Apart from the fact that we do provide services for those entrepreneurs, but that's it.
Okay,
It's just
so
a way to
it's-
describe a company.
Okay, so it's two separate entities that you're doing. Because I got confused of what you're actually saying.
I know, and people do typically. No, we are a service company, but our job is to incubate other companies for a fee and equity.
Okay, fair enough. Thanks.
One more question. Yes, please.
Question to Bill. I'm big fan of Connect. I think you get
Thank
great
you.
investments. Citymapper is a fantastic company I use all the time. But they are very diverse.
Yes.
So I'm wondering, what is the thesis of Connect Ventures, and how are you positioning to be the best for that thesis?
So we are a generalist, and we're like, what, 2/3 consumer and 1/3 B2B. But our thesis is user experience, and that we think that, in a smartphone world, that having well-designed software is going to be essential. So we want to go invest in the teams that can build the best designed, most thoughtful user experience that we can find. And we feel that at the stage that we invest in, that's the thing that we can kind of hook onto. And so I guess if we're trying to we want to be the best seed fund in Europe. I mean, that's a long-term aspirational goal, and we have a long way to go to get there. But that's kind of how we're trying to go about that.
Well, thank you very much, guys. Can I get a big hand for my guests, please?